Kitco Mining Special Coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Prospectors and Developers Association Conference in Toronto, in Canada. Gold is back in the spotlight, but are the juniors getting any love? Joining me to discuss this is Luc ten Harve, founder of golddiscovery.com. Luc, welcome back to Kitco.
Yeah, thanks for having me.
The gold price has been at record highs, yet it seems that many juniors are struggling to gain traction in the market. What is your view of the current market? Why aren't juniors necessarily getting any love?
Yeah, I think this is a topic that everybody talks about, and I think no one has a real answer. Everybody has a sort of its own view on it. I feel like if you focus on the company, I focus on companies a lot. I don't really think about gold price too much, and sometimes you have a good market, like in 2016 or 2020, but we didn't really have a prolonged market that really did well, or you have to go back to 2006. So I don't try to really find out. I mean, you have to, of course, not a lot of inflow. The markets in general are doing really well, but I feel like when the general markets are not going to do well, some people think it will flow into the juniors or into the mining space, but in those times, often these companies also go down. So I don't really know. I think it's just too good to be in technology right now, and as long as you focus, in my opinion, on good companies that you really understand, that can also perform in a market like this, you don't have to worry too much about it. Because sometimes I go back to interviews from 2011, 2013, 2014, and people always try to find out where we really are in a cycle, and I think it's almost impossible to predict. Even the smart people, they always think it's close, and if you then look back to 2014, it was still 2 years before it finally turned. So I don't try to answer that question for myself too much, but try to focus on good companies that I think still have, they're still undervalued, and that's easier than really trying to explain that this differentiation between gold and the equities.
Yeah, where we are in the cycle tends to be a retroactive activity, doesn't it?
And one thing, I think it's even difficult sometimes to, even if you've seen a bit of a run in the juniors, it's still difficult to know where you are. I mean, only in hindsight, if you go back 4 or 5 years and you can really pick the bottom and the tops, then you think, okay, now it's obvious, this was the top and this was the bottom. But if you're into it, and even if you're already into it a couple of months, sometimes you feel like this could still be a bit of a short rally and then go back to a lower level again. So I think only in hindsight it's very easy to say, where did it really start? Are we still in the bull market of 2016? Are we in the bear market of 2022? People have different opinions of where we are right now. So I think it takes some time before really we can conclude where we really are right now.
I was having a conversation like that earlier today. The question is, are we in a bull market? And it depends, I guess, what stocks you're looking at. Some stocks seem to be getting into a bull market. Others are still on the starting grid.
Yeah, and it also depends what you look at. TSXV is more the juniors, but TSXV also includes other companies than mining and resources. TSXV has been really weak. GDX has had a strong period, and the mid-tier miners did well. So, yeah, I think to give a general statement about where we are as an industry, I don't know, to be honest. Mid-tiers are probably in the bull market. Very small juniors are probably not in the bull market. So that will probably correct itself at some point if gold stays strong. But gold is so strong that, it depends on so many factors that I don't want to really make a prediction about what it's going to do. I try to focus on the companies, and if you have a good company, you feel comfortable. And if you're just playing it because of the metal price, I wouldn't feel comfortable, because then you really need the price to go up for it to work, and that's not my type of play.
Okay, I know you don't focus on the big gold companies, but I want to use that as a reference point. Many of the big gold companies, their share price is up 100% year on year. So investors are starting to get interested in them. At what point will that interest trickle down to the smaller companies and to the explorers?
And again, it's an answer in terms of, if you own the best deposits, those big companies, they may not be like in 2011, they probably don't do the stupid thing anymore by just buying ounces, right? They are pretty smart right now about what they want to buy. The deal has to make sense. So if you take that as a sort of as a rule, then you can only invest in things that make sense to big companies. Otherwise, why even try? So then you think about G2 Goldfields and companies that really have a good deposit or onto a good deposit in a good belt, where you can see like this company cannot stay around for much longer. You don't know if it's a year or half a year or 2 years, but it's just too good not to be taken over if you play the takeover game. So I feel like big companies will focus on the best projects, and it's fairly easy to say which ones are the best assets right now. What I'm trying to do is to find out which ones are in the process to become one of the best projects, which is a bit more difficult because you are typically fishing in the 10 to 30 million market cap range, or maybe even lower. That's what I'm trying to do. And if I find something that has the potential to be of interest to the big companies, that is sort of my strategy.
Now, G2 Goldfields, they've got 2 million ounces in Guyana. They've got a resource date coming up in the next few days. This is the Sunday on PDAC. Apparently Monday, Tuesday, they're going to have their resource update coming out. So a lot of expectation there. Now, you focus on the earlier stage companies. So what's your exit point? And I want to frame that question within this following context. A lot of companies seem to reach their maximum share price about sort of resource stage. So if you're a long-term investor, that would seem to be the right point to get out, because after that, companies then try to de-risk their projects by doing economic studies, metallurgy, spending shareholder funds, raise more money, diluting, and the share price goes down and down and down. And if early stage shareholders never get back to that height. What's your exit point?
This is not completely true in terms of, I think, the best of the best deposits. Look at Great Bear. They were smart about it, and they played it by not going too far into that phase. They didn't even go to the resource stage. Reunion, I think, never really got hurt that much. So I think the best of the best deposits, like maybe Snowline could be an example. They don't always have this problem. If you then go a tier lower, that's where indeed you have to be. Then if I think it's not going to be one of the 10 best deposits found in the last 5 years, then I would be more worried about the resource estimate, because they are often not well received, and it sort of puts a line in the sand, and in a lot of cases then the company suffers. And there's another reason for me not to go too far, is because I feel like I don't have the skills to model 100 or 200 drill holes, and there's people who are way better than me. When there's a lot of data, you need people who can really review that data. The earlier you are, the more of a benefit I have, because there's a little information and I can talk to the company a lot in a lot of cases. I can accept risks that other people may not accept. So for me, the earlier stage, sometimes I'm investing in something and I have a 2-year wait until something happens, but then I'm out within a year or two. So some people only invest when something big happens, and then they wait until a certain point. So I'm often a long-term investor, but the longest part is often the part before the excitement starts. And when the excitement starts for some reason, because of a discovery, for example, then I start thinking about, do I already want to sell something right now? Or do I think this is so amazing? And then it has to do with the type of discovery. If somebody hits 200 meters of high-grade gold close to surface, the likelihood of that completely failing is lower than when somebody finds 2 meters of very high grade, of course. So that's depending on the type of deposit. So there's not one way of playing it, but depends on the quality of the project and the size and tier 1 to tier 2.
Okay, well, one of the key things for success is access to finance. Some juniors seem to be able to raise a lot of money. They have good access to finance, while some others seem to perennially struggle to raise enough money to do any work at all, let alone meaningful work. Are we seeing a sort of bifurcation in the market between those companies that can raise and those that, really, that's not their strong suit?
I think very much so. I haven't seen. Well, my impression is that this period is really a period of a couple of companies do really well, and almost all of these companies have very strong sponsorship. And sponsorship could be, an investor like Pierre Lassonde, or an investor like Rob McEwen, or Ross Beatty, or La Mancha, Lundins. Those companies almost always do well. So you could say, just bet on those names. If they get in, you get in. That's a pretty safe strategy. But you could also have sponsorship from a corporate like B2 Gold, or they invested in Founders Medals. Those companies typically can raise money, especially if these big names came in, because everybody feels comfortable. If they want to be in, why not me? And then it becomes a self-fulfilling thing where, then the financing becomes easier. Of course, these big companies and big people have a network, so everything becomes easy at that point. If you don't have that, I want to see a company which at least has people inside or in the network that have a network, maybe not the Ross Beatty type network, but a good network, or they are buying in the market themselves and show to the market, I have so much confidence that I can still buy in the market, even though maybe they often have founder shares. I don't mind it, but I also want to see people actually spending some money themselves on shares, because if they don't do it, why would I? And you don't see it that much, to be honest. You don't see many companies, small companies, CEOs buying real amounts. Sometimes you see $2,000, $3,000, but if they have $200,000 of salary, I would want to see a little bit more than those amounts.
I know some companies have stipulations in director contracts and C-suite contracts that within a certain amount of time you need to have a certain percentage of your salary invested in the company. Sort of, as you say, if you're on $200,000 a year, within 2 or 3 years you need to have 10% of your salary invested in the company. I think that'd be good if more companies adopted that to, as you say, get greater alignment of their C-suite and their boards with generally shareholders. Why don't you think more companies do that?
I don't know if it has to be a formal rule. I think I can say that Calibre, for example, Calibre Mining, that is now being taken over by Equinox or merging. I'm not sure if it was a formal rule for them, but I feel like if you want to work with us, you are going to be committed and you're going to buy stock in the market or maybe in financings, but you're going to put some real money in, because you want to have people really motivated to make it work. And if you only have options, of course you also have upside, but you don't have downside. You want to have a bit of downside too, because I want to be aligned as a shareholder with the team, or the team should be aligned with me as an investor. And if they don't buy anything, then they should have a pretty good reason why not to, I think.
Okay, let's broaden that out, because if you're not fortunate enough to have a good network and you're a junior exploration company, you attend a lot of events like this where hopefully you'll meet investors. But for me, one of the issues there is the lack of curb appeal. Companies have their booth, they don't look attractive, there's zero curb appeal. And if you're trying to convince somebody to write you a check to invest money in you, surely having better curb appeal, better marketing, you'd seem to think that would be a great thing, but very few companies have that ability. Why do you think that is? Why does the exploration center really settle for second or third rate or worse marketing?
I think there's a lot of companies that are run by geologists. I'm not against it, but some geologists are just pure geologists. I mean, they hate the sales part. And I think you have to be honest to yourself. I know what my weaknesses are, and I mean, I'm not a junior mining company, but you have to, first of all, realize what your weakness is. And if you realize your weakness is, sales or marketing, and you are the CEO and you cannot get anyone excited about your story, then you shouldn't be in that role, and you should probably be in the company in a different place, right? And if you at least realize it and you look for a solution, then at least there's progress. But there's also companies that simply say, no, I don't think it's needed. We have quality, and people at some point will realize that. I don't think it will work like that in most cases. I mean, unless somebody makes a huge discovery, people will jump on it. But you need to be quite good at telling a story.
You've just read my mind for the next question. I was going to ask you about excitement. Many CEOs sound really bored when they talk about their projects. That, for me as a journalist, that's a turn-off when I'm trying to get information. And imagine as an investor, that's even worse. If somebody's boring the pants off you and not instilling you with excitement, there's no way I imagine you're going to write them a check.
No, if they are really not excited, no. Some people may just have a different. I mean, if you talk long enough with people, sometimes you find out that they're not in the right spot, but they just have no ability to also convert their excitement to someone else, I mean, to really tell a story. So it depends. I mean, if you get to know someone, you find out soon enough if they actually like what they're doing. If they have 5 jobs and one of them is a CEO of this one, and then they are a CEO over here, and then that already becomes a bit problematic, I think. So that's one thing. So but you have to enjoy talking to people. You have to enjoy telling a story, because it's all about the story, right? Especially in the early stages. If you don't tell a story to people, you don't tell what could happen if it all works out. You cannot even, envision that. Then it's not going to work.
Okay, we've talked about investors and finance, but in general, I think it'd be fair to say there's fewer pairs of hands with money and less money in those hands in the space. Yet the number of companies seeking that money does not seem to shrink to fit what's actually available. So it does seem, is there a structural problem here?
I have the impression that almost every company, without having some form, and I'm repeating myself a little bit, some form of sponsorships from someone who is good at this thing, like from a strategic point of view, from an investor point of view, understands what the market wants, those companies almost cannot make it. And another thing, some companies just have one property and they have one target, and it's an amazing target, and they can get people excited, but they don't really think about what if the next 3-4 holes are not going to make it, because in most cases you need more than those 5 holes, but they only have a budget for a couple of drill holes. And as an investor, I think, what will happen if those 5 are not going to give any good results, but they give encouragement technically? If the stock would go from 20 cents to 3 cents, you're almost done. I mean, if you start raising money at 3 cents, your shares blow out, and so I sense that some companies don't even think about it themselves. They just think about, hey, we want to drill this thing, we need money for this thing, and yes, we've got the money, we just made it by getting 80 people in our financing. And then they start drilling, they don't find it. They are a little bit encouraged themselves because they see the right rocks. Investors hate it because they don't see grade and they sell. Stock is back where it started or probably lower. And I really have the impression that a lot of CEOs then think, oh, what shall we do right now? And that's often a rollback. So I think you have to think a couple of steps further. Like, what are we going to do if this happens? And what are we going to do if this happens? And that's why it's better to invest in companies that have multiple projects or just one big project where one bad drill hole doesn't kill the story. Because there are enough companies that have one small little target or one big target. They drill it, they test it, no good results, everybody's out, nobody talks about it anymore. And it's very difficult to restart that thing again.
I think that touches a point, something I've seen a lot, that very few companies actually have a business plan. You attend a lot of investor meetings, you sit through a lot of presentations, you look at a lot of investor decks. There's never a business plan in there.
No, that's right.
So it must be, again, it's hard for you to invest, and it's also hard for the company to know what their next steps are because they don't have a plan in place.
Yeah, and a PowerPoint, I mean, you need to, in a couple of slides, get somebody excited, or maybe to verify, but in a more modern way. But in a very short period, you have to excite someone, but you also have to be able to just, in person. I was at the conference, the other conference, last couple of days, and some CEOs I don't know. They take you by the hand, they want to tell you a story, and you find it annoying. But other CEOs, they take you by the hand and they say, hey, I want to tell you a story. And they're just good at it. I mean, in 5 minutes, they can make you think like, oh, wow, this is pretty interesting. And that's probably a skill that I don't think I have that skill, to be honest. If you have that skill and you can get somebody excited within 3 or 4 minutes, that's dangerous for the investor because you almost get the feel like, oh, I need to buy this thing because otherwise I may miss out. But that's what the company needs to get somebody at least excited about their plan. And I think if you have somebody like that in your team who can get somebody excited very quickly, well, that's probably an important skill.
That is a learnable skill as well, and I think a lot of CEOs don't make the effort to learn that skill.
Well, Rick Rule told you a month ago, I think, that he's still practicing in front of a mirror, which I found very honest from him and nice to say, because it shows that, you have to do work and you have to prepare really well to do it. And even probably the master of public speaking in this industry is still practicing in front of a mirror, if he's saying the truth. So that's quite interesting.
Okay, let's wrap up with what do you think will be some of the key drivers for the exploration space this year?
Well, I can guarantee you there's going to be something exciting. I mean, it's going to be a super exciting story. I just don't know which one, and nobody knows. So that could be the title of this interview. No, I mean, I think you just have to follow the news every day, and you have to have the ability to identify when something changes. And this is really an events-driven business, and every day there could be a company coming out with a news release that makes you like, wow. And there's not 10 releases like that every year, but there's often 1 or 2 or 3 of them. So you have to have cash in the bank if you are an active investor, to also be able to jump on the opportunity when it presents itself. And not having the cash in the bank is a mistake, because you know there will be an opportunity and you have to then be ready to jump on it if you are able to evaluate that opportunity.
Excellent. Well, I wish you a lot of success this year. Luc ten Haaf, thank you very much for joining us today.
Thanks, Paul.
And we have a lot more to come for the 2025 Prospectors and Developers Association Conference here in Toronto in Canada, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of PDAC is brought to you by Gold Mining, Uranium Energy Corps, and Uranium Royalty Corps.